Well, hello, everyone, and it is Friday on a bit of a strange week in financial markets. And first thing we're going to look at is towards the calendar and see what's going on. But there wasn't a great deal in terms of information out across the board this week. Probably the main focus of attention would be the UK numbers. Pretty close to home with the claim account change and the unemployment rate. Obviously, the unemployment rate is the unemployment rate, and the claim account change is then sort of like the jobless claims figure out of the US. So a bit of positivity around that. Two positive numbers. Less people claiming unemployment benefits as compared to the month previous, and then the unemployment rate has also ticked down compared to the month previous as well. So that's strong data in terms of the UK. With inflation, as you can see here, CPI actuals for 9%. Actuals for 9%. Consensus was for 9.1, so a little bit of a miss on expectations, but 2% higher than the previous. So it is a strong number all the same. We also came down to Friday this morning, which is a bit of an interesting data point. You know, with retail sales come in 1.4% when we were expecting a further decrease like last month. Reason why that's interesting is it says that the consumer demand is remaining strong amidst the issues that these high levels of inflation are presenting. So people are still willing to spend money regardless of the higher prices. So that is a positive for the UK economy, with the Bank of England turning a little bit more hawkish. Or dovish, sorry, at their last meeting. Said they were, their outlook on future monetary policy adjustments were a little bit cloudy. They're a little bit unsure. They're expecting GDP contraction in Q4 of this year, and also inflation to peak in Q4 of this year. If these data points keep coming in strong, they are going to have to tighten monetary policy further. So definitely worth an eye on going forward into the week ahead. We did have posted, as you can see here, a big bullish engulfing on the weekly time frame on cable, but that's in part helped by a weak dollar as well. So you got a nice move higher on cable this week, strong move higher, but that's a bit of strength, underlying strength in the pound, and also a little bit of a choppy week, but positive all the same in terms of the pound. We've also had a bit of a negative week in terms of the dollar. The dollar is set to snap its 6-week winning streak, tracking a move lower in US 10-year yield. You can see the downside in US 10-year yield, a little bit of downside as you can see here in the dollar index. Now that's up at a level I was talking about for a few weeks. We were due a pullback, and that pullback has presented itself this week. Had this move a little bit lower, yields move a bit lower. Reasons being, obviously, with the Fed tightening monetary policy with the 75 basis point worth of hikes they've already done, plus the markets are expecting 50 basis points at each of their next two meetings in June and July. So that is obviously not positive for something like stocks, but that is something you would expect to be kind of positive for the US dollar, which it has been in over the past. As you can see here, this uptrend over the past year, it's been extremely strong, the US dollar. But what's come across in the past few weeks is a few soft data points in relation to the US dollar. We also seen here retail sales out of the US, actual 0.9%. I know it came in line with consensus, but it is still a decrease on the previous month. So that shows slowing consumer demand, slowing demand from consumers to go out and spend money, which is a bit of a negative point. The numbers have showed signs of inflation topping out, as well as a few other weak data points along the way as well. Also, couple that with the fact that the Fed's tightening is fueling concerns around growth, which gives us a kind of scenario that doesn't happen quite a lot. Normally when stocks sell off, you'd expect the dollar to appreciate and vice versa. But because the Fed have tightened and are continuing to tighten so fast, that is like with the high levels of inflation, couple that with the high levels of inflation, that has caused an economic slowdown, and caused some soft US data points. Now the Fed have still got the hike interest rates to cool down inflation, but now they've got slowing economic data. So they're kind of in a point right now, which is markets fears and why markets have continued to sell off this week, to the point that they may have to continue hiking interest rates while we've got soft data points, and they are going to potentially hike the economy into recession. Now that is a negative for both the currency and for the stock which is not something you see too often. So we see yields lower, we see US dollar lower, and we see S&P lower because money has been put into treasuries as a safe haven trade and has been removed from these different assets. So quite an interesting set of events, and definitely is worth keeping an eye on going forward. One thing helping stocks, though, we can see here, if we have a look at the move from the highs, we haven't quite hit that bear market yet. If we go right from the high down to the low, we can see there 19.94%. I had a look across a couple of other charts. Maybe there's different pricing in a few of them, but 19.92 was the figure I got on the other charts that I looked at. So we've still not quite got the bear market on the S&P, which that does have that going for it, and we are looking at a potential, as we can see here. We go down to a 4-hour time frame. We are looking at a potential double bottom. We have since moved lower, made an equal low down here, and we are moving higher. If we can get that double bottom just before we break through that 20%, that would be positive, but we would really need to see it up through 4100, the round number of 4100, before we could consider that double bottom in play. It's just a potential idea for now. But another thing the stocks have gone for them, just while I was looking at, was I go back here, and if I get some of the FANG stocks, you can see Apple. If we have a look at Apple and see where we're at, I mean, if we're looking for a potential bounce back on stocks, maybe a potential move higher before we enter the bear market, it'll be interesting to see how these levels perform over the course of the American session today, whether we can get a break through them, a weekly close below. You can see that support level across here, bit going on back here, bit here as well, and we are testing it now at the moment. Now this is a weekly candle, looks like it's closed below, market is not opened. Something I will watch keenly into the close today is whether we can get a close below that level in Apple. We can move on to Amazon. What we are doing on Amazon is we are testing the previous all-time high set back in February of 2020, and we can see here we're testing that again here. Does this hold the support? Obviously remains to be seen into the close today, but we did have a nice weekly hammer yesterday. If we get a similar sort of close today, that would also be positive for stocks and may encourage that double bottom to play out. As we come across to then Tesla is at these lows again, and we can see here, these lows. Oops, I get a little box. These lows back here. These lows back here. We were met with a hammer when we were back here in February. We have been met with another hammer of last week, and it remains to be seen how these candlesticks close. So, be an interesting American session today. See how we can close into the end of the week. If these levels can hold, that will be a positive to end the week on a positive note, but it is a little bit doom and gloom at the moment. But anyways, as we move on to next week, we'll have a look at the calendar next week. Not a great deal of economic data points to pick out next week. Pick it a bunch will probably be the minutes out of the Fed. Next week, next Wednesday, 7 o'clock. Apart from that, we've got some consumer confidence numbers out of Germany that might be of some relevance to us. We do have GDP as well. Consensus is for a decrease, but it is a second estimate for Q1. It is not the first figures that we get, so not really too much to be expected off of that. Apart from that, some PMIs and stuff out on Tuesday, but not a great deal in terms of stuff to go off, in terms of tradable opportunities, but definitely something we need to keep an eye on anyway. I'm going to wrap it up there then, folks. It is Friday. Have a good afternoon, have a good evening, enjoy your weekend, get some rest and relaxation, and I will see you again next week for another weekly market insights. Thank you.